Hello everyone, Coach Jay here. In this episode, we're going to talk about earnings as far as what they're used for and particularly the process you want to go through when preparing the analysis piece for earnings. For those new to trading and investing, a quick overview. Earnings is all publicly traded companies are required to report earnings on how their company did since the last time they reported earnings, which is typically quarterly. Earnings reports consist of three main parts: gross revenue, net income, and guidance or future estimates of the next quarter's income. We talk more in detail about this, understanding the relevance of those numbers and how a stock price is affected in our video Strategize Earnings Release Before and After Earnings Reports. But I will say this: gone are the days of the old phrase, a stock price follows earnings and earnings follow the economy. Well, not so much anymore for certain stocks. Focusing in on analyzing earnings, as we discussed in our video about checklists for trading, on Sundays, traders and investors typically look on perhaps their broker's website at the calendar of earnings for the next 2 weeks and identify those stocks that will be watched over the next 2 weeks for momentum price movements. While past behaviors don't guarantee future results, patterns tend to repeat themselves. With that said, that patterns tend to repeat themselves, the first step in the analysis is to determine is the earnings release date and put that date on your radar, so to speak. The second step is starting to make your list of stocks you want to trade and see if you can determine its repeating pattern, if any, for when the stock price begins to react to the upcoming earnings announcement. Some stocks start to ascend a week prior, some a few days, and some the day of. As you identify a handful of stocks to watch every quarter, it is this list that you will follow and react to when you notice the previously repetitive pattern is occurring again, and form a trading plan using the trees method that is in alignment with your acceptable risk-reward ratio. I do want to point out, for companies that report earnings after the closing bell, while I have seen wild swings throughout the day, I have seen a consistent pattern of high volume and high momentum, either up or down, in the last 30 minutes before the closing bell and the reporting of that company's earnings. Identifying and analyzing these momentum moves will allow for either long or short plans to be created to capture this momentum movement, and entries and exits to occur before the closing bell and not to be held while the company is reporting earnings, as that is speculative trading. In our next video, we'll discuss this analysis in more detail along with the potential strategy for earnings reports. Well, that concludes this episode. We hope this episode provided you an educational guide to better prepare you to begin your analysis to confirm the direction and strategize your trade of a buy or sell. Thanks for joining us, and as always, let's try every day to do something great. Take care, everyone.